Thank you, OT and Ski. Thank you. So last week, I started everything off with the stages of learning, and I think it's important that we go through the different stages of learning again. If you guys were in chat just a little bit ago, Scales, aka Wedgezilla, put up a nice little picture, and it was basically I think it was the 10 stages of trading, what every single trader goes through. Hey, I'm doing great. Oh, I suck. I'm doing great again. I'm ready to quit my job, and it goes on and on and on through those different stages of training um, that we all go through, that we have all been through. I'm going to boil it down to the four very, very specific stages of learning. And these different stages of learning, these are applicable to literally any skill that one wants to acquire. I mean, absolutely, positively, any skill one wants to acquire. The different stages of learning are as such. Stage one, unconscious incompetence. That's basically you don't know what you don't know. Stage two, conscious incompetence. Um, you know what you don't know, followed by stage three, which is called conscious competence, followed by stage four, which is unconscious competence. We all want to get to stage number four. That is where you're really, really started rocking and rolling. I don't know why I have all these pop ups on here, but hey, it is what it is. We're going to start off with stage number one, unconscious incompetence. This is a stage of blissful ignorance. We don't know what we don't know. So the result of that is that in this stage, our confidence exceeds our ability. We have very little experience or skill, and we are absolutely unaware of the deficiency of the subject slash skill. I liken this back to those of you who have ever tried to drive a car with a stick shift, so a manual or a standard transmission. I can see people nodding their heads. Yeah. So the first time, or actually before you ever tried to drive a car with a stick shift, maybe you were watching one of your parents, an uncle, your grandpa, your sister, your brother, a friend, and they're driving it with relative ease. They're not even thinking about what they're doing. So we look at them and we're going, I can do that. This is really, really simple. So at that point, we're confident because it looks so simple. They make it look simple. So I don't care what the skill is. It can be driving a car, shooting a basketball, trading stocks, trading options, playing golf, whatever it is, any acquired skill, you have to go through the different stages. So this is stage number one. You just don't know what you don't know. Followed by, well, we must become conscious of our incompetence before learning can begin and new skill can be developed. We have to actually become aware that we have no earthly idea what the hell is going on. Followed by stage two. Now, this is a very, very, very important stage. This is called conscious incompetence. This is the I know what I don't know. I have no earthly idea what's going on. And this is as our awareness evolves into this stage, we begin to realize how little we know. Our confidence, while high in stage number one, because we don't know what we don't know, it actually drops. I mean, it really takes a hit during this level because we do realize that our ability in any skill is limited. We're very, very uncomfortable at this level. But we become aware of the existence and the relevance of skill as well as efficiency in this area. This is the spot where this is the level right here where the rubber meets the road in any skill, and it's so very important. We've all seen it with traders that they go through that first stage. Oh man, I can do this. This looks easy. They get to the second stage and they realize that this is really, really tough. I've said it before and I'll say it again. This is the most difficult, easy money that you will ever earn in your life. And again, I see the heads nodding up and down. This is the stage that I call you are literally 3 feet from gold. Um, a lot of people just quit, because this is so hard. And irrespective of skill, they quit learning something, they quit a specific skill or they quit trying to acquire a skill because it's hard. I mean, this is just a really, really hard, it's a hard skill to learn. For those that are in this place right now, and I know there are a bunch of people in this place right now, do not give up. You are literally 3 feet from gold. If you can make it past, if you can power past, if you can get past this level right here, guess what? You're going to do very, very well. In this stage, we learn an awful lot, not only about trading, but we learn about ourselves. We learn about our ability to push through that pain. With whatever skill you are trying to master. If and when, and for you guys, it's when you get past this level, we get to the third stage, which is competent or conscious competence. We know what we know. Um, we get to this level when we can perform a skill consistently at will. Now, while we can perform this at will, it still takes our attention and concentration. Now, remember stage 1, we had high confidence because we didn't know what the hell we were doing. It just looked easy. Stage 2, we realized, oh, this isn't so easy after all. I think I'm going to quit. No, you're not. Again, you're 3 feet from gold. You're moving to stage 3. Our confidence at this level starts to increase because our ability is going up. But we still do need to concentrate and think in order to perform this skill. If you're at this level right now, congratulations, because most people have given up by now. We can perform this skill without assistance. We don't need to ask a whole lot of questions, okay? We just need to refine at this point. And we have also realized how much we have learned. Now, for those, now, this is a stage where many choose to remain, okay? Because this is a comfortable stage. You know what you know. You're really, really good at this skill. If you can power through to the next stage, that's where the magic happens. That's where you become a true master. And it is not until this next stage of learning that you're there. It's called unconscious competence. I'm going to break this down. This is where you don't know what you know. You just do it. People can ask you how you do it, and you go, I just know. I can look at a chart. I know what's happening on this chart right here because I've seen it 1,000 times or 2 or 3, or how many ever times you've seen it, whether it's through, and mostly it's live. All the back testing and all the studying, that's levels 2 and 3. Well, actually 1, 2, and 3. But it's at this stage right here where it becomes almost second nature. Now, at this level also, our confidence, our ability have peaked. We no longer have to concentrate. You just see it and go, boom, there it is. There are multiple traders in this Discord who are at this level, stage 4 of unconscious competence. You don't know what you know. It's just there. We blend the skills together and they become habits, and we can do them while our mind is on other things. I don't necessarily recommend trading while your mind is on other things, but if you are one of the lucky few that happens to be at this level, it's just second nature, so you can do that. So anyway, those are the 4 stages of learning. And I know people are at various stages on their trading journey. If you are in stage 2 right now, I would implore you to not give up. You got to keep on working at it. You got to keep on studying at it. You have to keep on trying. Don't give up because you are so close to where you want to be. Break out of that second stage, break to stage 3, and put those miles behind you, if you will, and get to that stage 4. Stage 3 is a good place to be. You're going to make a lot of money at stage 3, but the magic happens once you get past stage 3 and into stage 4. Okay. Enough of that. Let's get. Please do.
An analogy on that.
Yep.
For stage 4 guys, think of stage 4 as this. Have you ever driven your car, we'll say to work, from work, whether you're on a midnight shift or whatever, and you're tired or whatever, and you don't even have to think about it, but you make your way home, and there's times where you could be driving and be like, oh shit, I'm already at a certain point, and you didn't even realize you got to that point or how you got, you're just there. You just can do it without even thinking. It's unconscious, you just automatically do it. So if you could become that way as a trader, like for me with the orb, that's how I am with the orb. If I see a setup, it just automatically, boom, I'm entering it after it meets all the criteria. And that's how I am with it. Not saying I'm that way with other, strategies that we're learning, but the best analogy to do it is like driving a car. If you're driving, if you're tired or whatever, even going to work in the morning, next thing you know, you're at a convenience store or passing something that you always pass, and you're like, oh shit, I didn't even know the time went by fast. I didn't realize I was here. And you don't realize, the turns you made or whatever to get to that point. It just comes unconsciously. If you could become that way as a trader, like Pdaddy says, man, you're really making it, and it'll become a lot easier for you. All right, sorry to butt in there,
No,
Pdaddy.
no, no. I mean, that's Ski. That is absolutely perfect. You don't even have to think about doing it. You just do it. You know, irrespective of the skill, you just do it. You know how to do it, but you don't have to think about it. And it might be even hard, maybe not hard to explain to people, but you just say, I just do it. I just know how to do this. I just know. Okay, straight into 920 strategy. The 920 crossover strategy is not a new strategy. It is a very, very popular strategy for retail. The strategy relies on simple moving averages, so the SMA. Some people use EMAs, the exponential moving average. I use SMAs because it works better for me. I also use the MACD. Now, I will tell you right now, I use the MACD less and less and less every single day. Unless it is, and I'll get to that here in just a few minutes, unless it is a very, very conservative strategy that I'm trading on the 920, I don't use the MACD. Now, when you combine the 920 crossover and the MACD, it's a very highly profitable strategy. Now, as with all strategy, there are nuances that can only be learned through hundreds, if not thousands, of hours of screen time. And I say that thousands because it takes so much time, regardless of the strategy. It just takes a lot of time. Um, if we can watch more and trade less, that is absolutely perfect. If your setup is not there, do not force the trade. Wait for your setup. When the light turns green, hit that gas and you're off and running. Okay, trading laws. Let's go through my trading laws. You can call them trading laws. You can call them trading rules. Law number 1, protect your capital at all costs. I'm going to repeat that. Protect your capital at all costs. Blindly entering trades without a good reason is gambling, and we don't do that here. We always wait for trade confirmation before entering a trade. So whether it's this strategy or any other strategy out there, you wait for trade confirmation before getting into the trade. Law number 2, always follow the trend. Do not trade against the trend unless there is confirmation that the trend has reversed. You cannot perfectly time the market, so don't try. Again, this is gambling, and we don't do that here. Always, always, always follow the trend until there's confirmation that the trend has reversed. And then still, always follow the trend. Law number 3, the 920 crossover uses support and resistance as its main confirmation points. The 920 gives a different visual representation. That's all it is. It's just a visual representation of price action. Price action is absolutely, positively key. The candles, 100%, will tell the entire story of what is going on the chart. But the 920, it's just a visual representation of me. Law number 4, this is a biggie. I actually took this from flying airplanes. It's better to be in a trade and wish you were than to be in one and wish you weren't. It's like, again, flying airplanes. It's better to wish you were in the sky and not be in the sky than to wish you were not and actually be in the sky. So that kind of goes back to law number 1, protect your capital. If you're not in a trade, you're not losing money. Just always follow that. In my opinion, that's a really good law. Law number 5, emotions are your biggest enemy. You can only be successful with this or any other strategy if you keep your emotions in check. But Pdaddy, how do you keep your emotions in check? Well, it's simple. You can do one of two different things. You can paper trade. You can figure out the strategy that works best for you, and then you can paper trade. Now, here's the only problem with paper trading. there's no skin in the game. So if there's no skin in the game, how can you really get emotional over trades or watching money drain out of your account if you're paper trading? You can't. So my recommendation on that is to do very, 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 very small positions. You could even trade small stocks, okay, to kind of, I don't want to say numb yourself, but for lack of a better term, to learn how to get those emotions in check. My recommendation, and this is, I learned this from Mark Douglas. I'm a big Mark Douglas guy. Um, do 20 trades. Get your strategy, set your rules or your laws, and do a test batch of 20 trades. At the end of that 20 trades, and do not change anything for those 20 trades. Don't change anything about the strategy. Do those 20 trades, and at the end of those 20 trades, see how you did. Okay, see from a probability standpoint how much you earned or lost, and see where you need to maybe do a little bit better. But law number 5: emotions are your biggest enemy. Law number 6: the first part of the move is typically the strongest. Yes, that is where over time, that's where the vast majority of the money is going to be made. And you can look at any chart out there. And again, vast majority, and it's all based on probabilities. Law number 7: contracts will lose value in times of consolidation. I don't care if it's a 0-day or not, in periods of consolidation, because uh, your value just you start to lose that value. Contracts will lose value through theta time, which is the time decay of money, the closer you are to the expiration. Friday afternoon, 0-day. End of the month, end of the quarter, 0-day. Let's say it's 2 o'clock in the afternoon. We got 2 hours to market close. If you are in a period of consolidation, you are getting chopped up. So always be aware of taking positions in periods of consolidation or trading through periods of consolidation. Because when you're in consolidation, the volatility necessarily goes down. When volatility goes down, value of contracts necessarily goes down at the same time. Okay. Now there are three different strategies within the 920 strategy. We have a conservative, an aggressive, and a more aggressive strategy. Conservative strategy. I started trading this conservative strategy when I started trading options. And it worked very, very well. It's a great strategy. So for calls, the nine SMA must cross over on the positive side of the 20 SMA. Okay, makes sense. The MACD, this is where the MACD comes in. The MACD must also turn green within 2 to 3 minutes of entering the trade. So in other words, the MACD must be green. Okay, but only for 2 or 3 minutes. If it's 4, 5, or 6 minutes, you probably want to stay out of the trade on the conservative strategy. Now, once the first red candle closes below the 9, it's time to get out of the play and take your profits. If it's a fast runner, close your position into strength. Runners can reverse very quickly, so pay attention to what the MACD is doing. That's going to tell you kind of when it's starting to slow down. Now, for lagging indicators, the probability of profitable trade on this setup is extremely high. Puts, same type deal. At the end of a bull run, the first red candle that closes under the 9 SMA will signal a put. Now, this is only true if there's a lot of room between the 9 and the 20. So here's kind of the thing with puts on the way back down. That 20 on the way back down will act as support. So a lot of times it'll bounce right off the 20 and go back up to the upside. Now, if the 9 and 20 are close together, wait until the 9 crosses back over the 20 to the downside to get into the play. Now, the aggressive strategy. Strategy for opening a position is the same as the conservative strategy. The only difference is that you don't close the trade when the first red candle closes below the 9 for call or above the 9 for puts. You wait until the 9 actually closes below the 20 for calls and above the 20 for puts. Okay. You are subject to, on this aggressive strategy, from a probability standpoint, you're going to make more money. Now, here is the issue with this strategy right here. If you wait for the 9 to close above the 20 for calls and below the 20 for puts, you know what happens? You lose value in your play because it's going against you. Okay. But again, that's the aggressive strategy. A lot of times, actually, from a probability standpoint, you're going to make more money with this strategy than you will with a conservative strategy. But you'll see a little heartburn because the trade does tend to go against you. But you will have made more money. Again, nothing is guaranteed, but from a probability standpoint, you will make more money on the 920. Because again, there's much more of the play left. Always pay close attention to support and resistance levels. This is typically where you see both periods of consolidation and candles going against your position. Now, the more aggressive strategy. Enter calls after the first green candle closes above the 9 and below the 9 for puts. For this strategy, pay very close attention to where you are relative to the 20 as the play can reverse very quickly. Now, if you're following the trend, your profit potential on this play is the absolute highest. You can use the above strategies to close or validate out of your positions. So, in other words, we confirm when we get into a position and we validate to get out of the position. But always wait for confirmation to get in and wait for validation to get out, whether it's that first candle that closes above or below the 9 to signal to get out, or the 9 actually closing above or below the 20 to get out of that play. And play around with the strategy. My suggestion to you is, particularly if you're new, start out with a conservative strategy, because you can make a lot of money with a conservative strategy. Now, things to consider with this or any other strategy, at least from my perspective, is I always execute my trade on 1 minute candles, but I'm always paying attention to both the 3 and the 5 minute time frame. These timeframes will smooth out the play and give you a different perspective. For me, it is always about perspective. I enter or execute on the 1 minute, but I use the 3 and the 5 minute for trend confirmation. Okay. So if you're following those trends, they can actually keep you into a play longer than you normally would have been in the play if you're just playing off the 1. Now, this next one is maybe a little bit controversial because it says take profits and don't let a green trade turn red. Yes and no. Because a lot of times, you guys are nodding your head again, you get into a play, it automatically reverses on you. And that's normal with any strategy because, believe it or not, the big boys out there, the big banks, the big hedge funds, the market makers, they all know these different strategies and they will try to shake you out of a position. I should probably amend this just a little bit to say, once the trade goes against you and hits a very, very specific stop loss area, whether it is a candle, whether it is an area, whatever that specific area is, you get out on the candle close, or you can get out when it hits that level. I wait for candle closes to get in and get out of trades. I don't take any intra candle trades. Now, when you're in your losing position, get out quickly. You can always get into another play. And I say get out quickly at the candle close. Again, that's my strategy. I use a specific candle or I use a specific level to get out of plays when they're going against me. I I try not to do anything arbitrary. I try not to take any arbitrary positions. There's always a reason to get into the trade. Likewise, there should always be a reason to get out of the trade. Don't be arbitrary. I would also add, and this works for me, and I know it works for a lot of other people in here, ski and OT included. Once you are in a play, and it's a high probability play because we should only be playing high probability plays. Once you are in a play, do not pay attention to what the value of the contracts are doing. Pay attention to only price action, and that price action is going to tell you when to get out of the play. It's hard to do. until you do it a bunch of times, to where you're confident. And again, when the trades go against you, you're gonna start losing money. But don't pay any attention right now to your P&L. The P&L, while important, it at this level it just does not matter. So here's why it doesn't matter. The only thing that matters is trade execution. So it's all about the process. It's process, process, process. If you are when, I shouldn't say if, but when you are able to trade without trading errors, um, that is when everything becomes much more clear. And you're going to be much more profitable. Trading errors. What are trading errors? Those are, you could be taking arbitrary positions. You can take a position you shouldn't take, so that's a trading error. You can get out of a position when you shouldn't get out of a position. You're leaving that money on the table. If you have a law that says I'm getting out from the conservative strategy once a candle closes above or below the 9, but you get scared out of a trade because you see all that money in your account, leave it alone. Leave it alone. That is absolutely positively a trading error. We call that, well, there's a saying, and again, this is Mark Douglas. You are you're eating like a bird and shitting like an elephant. Meaning, and I know I've seen it a bunch of times, and I've talked to a lot of people about this. They see their P&L turn green, and they're like, "I got to get out! I got to get out!" And they take profits really, really quickly. But when a trade goes against them, they're like, I'm going to let this play out and see if it goes back in my direction. That's hopium. Okay, that's gambling. That's hopium, and hopium is a hell of a drug. Again, down here, practice. There's no substitute for practice and screen time. There just isn't. Watch more, trade less. When all else fails, always refer to rule number 1, which is protect your capital at all costs. This is a marathon, not a sprint. There are no shortcuts. Now, SPY is emotionless. It doesn't care about you, your feelings, or your equity. It just doesn't care. Now, big one here, take positions commensurate with your account size. I'm going to add something to this little statement here. If you cannot perfectly execute your trades without trading errors, take one contract. You can have $100,000 account. Take one contract. So here's the reason to take one contract, because you're confirming into a trade. You're getting in when you're supposed to, but you're going to get out when you're supposed to too. Okay. Take one contract. That's my recommendation. So whether you have a $1,000 contract or $100,000 contract, unless you can let your trades play out to a specific level or have a specific reason for getting out of the trade singles. I know might sound like a big deal because you're sitting back thinking, I got a lot of money in my account. Well, we don't want to gamble. I know everybody in here would rather learn how to do this for the long term than just throwing a whole bunch of fucking money at a trade, hoping that it plays out. Trade singles. I've made as much as $700 in a day on single contracts before. It's out there every single day to make a lot of money on singles. So play singles. Now, it's okay to be wrong about a trade, but it's not okay to be reckless. All winning strategies are based on probabilities, and we are not, I repeat, we are not dependent on a single trade, but rather a series of trades to be successful. If you think for some reason that you're going to be successful on 100% of your trades, you are going to be very, very disappointed, because that's just not reasonable. Trading is based 100% on probabilities. It's like going to the casino. The casino realizes that they can have winners. They can have a lot of winners. They can have $1 million winner. They don't care. They don't care. I do announcing at casinos, local casinos, and for big events, they call me out to announce winners. So we're announcing, maybe 8 or 10. That's mostly eight $5,000 or $10,000 winners every hour for 6 hours. On New Year's, we give away cars. We do that kind of stuff. The casino doesn't care, because that brings the people in to spend money. The casino realizes that from a probability standpoint, they're going to make money, and they know how much money they're going to make. Okay, so it's all based on probability. So my point is, be the casino. If you understand how much money you're going to make from a probability or your probabilities of winning, once you get to that level where it's effortless, you become the casino. Let's see here. Watch price action again. I already covered that. Don't pay attention to the contracts. Watch price action. Now, when the price action tells you to get the hell out of the trade. Okay? Wait for your next setup. It's all about the setups. So take your next setup. Let's go. Now, specifically for the 920 crossover strategy. I can go over this until the cows come home, but ultimately what you're going to have to do is you're going to have to test this. You're going to have to go back and you can back test it, you can live test it, you can paper trade it, you can use this for SPY, or if you're just getting going, you can use this for any value stock out there, because it works with anything. It just absolutely positively works for anything. Now patterns, they present themselves on a statistical they statistically present themselves very, very regularly, but whether you win or lose on a trade is 100% random. It's just based on probabilities. You can have the perfect setup and it goes against you and you lose money. You can have the perfect setup and it runs. So it's all based on probabilities. But I will add this as well. If your edge presents itself, you almost have to take the trade. So you're almost compelled to take the trade. So here's the reasoning behind that. If I give you a coin, let's say it's a quarter, and I said, okay, if you flip this coin 10 times, I will promise you that 7 out of 10 times this coin will land on heads. But you don't know which ones are going to land on heads and which flips are going to land on tails. You'd flip it. You wouldn't stop flipping it because you realize that from a probability standpoint, you're going to come out ahead because 7 out of every 10 times you flip that coin, it lands on heads, and you're calling heads every single time. That's what trading is. You don't know which trades are going to be winners. You don't know which trades are going to be losers. So if your edge presents itself, you're compelled to put on the trade. That is my opinion. That is my opinion. If your opinion is different, that's fine. That's fine. I'm just one guy. This is just one guy's opinion. Okay, so here we go. If does anybody have any questions up to this point? Feel free to unmute yourself and ask any kind of question you'd like right now, because I'm cool with that.
I got a question, Pdaddy.
Yep.
Yeah, question is, I was looking at my chart too at the same time while you were explaining,
Yep.
and what I saw on TradingView is there's some good on the longs. It's okay for the 2 to 3 minute, like you said before. It has to be green on the MACD.
Yep.
How about on buying puts? Does it have to also be 2 to 3 minutes of red, and not more than 2 to 3 minutes of red?
Okay, so actually puts are going to be a little bit different, based on my studies of it. Now, if you make a crossover, and as long as it's trending, if it makes the crossover to the downside, again, as long as it's trending, then you put on the play. But again, that's something that you will have to. And again, I pay less attention to the MACD now than I used to. So if you're being ultimately conservative, don't get in on a put unless the MACD is red. So don't get in on a call unless the MACD is green. Don't get in on a put unless the MACD is red. Is that reasonable?
Hey, Pdaddy, I have to log out because I can't hear you. So I'm gonna log out and then log back in. 1 second.
Okay. Hey, can everybody else hear me? Blink twice if everybody else can hear me. Somebody unmute. Everybody got me?
You're echoing.
Yes.
Yes, sir. Yes, sir.
Okay. All right. Sounds good. Okay. I'll go to the chart for just a minute. This is Friday's chart. I looked at. I think that the red green numbers in the poll were pretty good. So yeah, congratulations if you were green or red. It happens. Again, trading is 100% based on probabilities. You don't know when it's going to be in your favor or when it's going to not be in your favor. It was both an easy day and a difficult day to trade SPY because I'm sure a lot of people after Thursday had a bias that it was just going to, open up and dump. And it did. Look at that. Beautiful, beautiful, beautiful. Okay, look at this. Oh, look at this beautiful cross. Actually, we didn't have a cross because the 9 was below the 20. So the 9 is my blue, the yellow is my 20. I've got the 200 up here that's red and the VWAP. So I'm always paying attention to the VWAP and the 200. I use the VWAP and the 200 for nothing more than areas of support and areas of resistance because they like to use those areas for both support. If it's above, use it for support. If it's below, use it as resistance. So we have multiple crosses. This was not a cross. I didn't play this. I typically don't play the open. That's just my strategy. I wait 15 minutes typically, wait for a shakeout. And there, look at that. We're 20 minutes in. And we're crossing right in here. We get a 920 cross. Now on the conservative strategy, we cross right here. So here's our confirmation point on this green candle right here. Look, it turns against us a little bit. Maybe this is our confirmation point. Let's make it a little bit bigger. So we cross right here and we're confirmed right here into this trade right here. Okay. Now, once you're in that, before you get into the trade, you need to be able to establish your level of risk or how much you are willing to let it go against you. That's before you get into the play. So it could be this candle down here. If it breaches this candle back to the downside, I'm out. Okay. It could be this. It could be a dollar amount. I don't like a specific dollar amount. It could be a percentage. But for me, it is a specific candle. A specific candle close will get me out of a trade. So we've got a close. We've got a cross here. Okay. So if you're playing the conservative strategy, what happens is a lot of people are going to start closing here. Oh, I got a big green one. I got a green one. I got a green one. I got a green one. Oh, I got red. I got red. I've got a doji right here. What's it going to? But this is where we actually confirm our. Again, that's the conservative strategy. Some folks are going to get out of the trade here, some here, some here. But this is the red candle because that's the first red candle that closes below the 9. Okay, conservative. Very good spot to get out. Again, because you can always get back into a play. If you're playing it aggressive, you're going to wait down to this cross right here. Or if you're playing it very aggressively, you're still using this level right here as the spot to get out of that trade. Okay. Now, I talk a lot about using both the 3 and the 5 minute for trend confirmation. Let's get to the 3. Look at this area right here. We're confirmed into the trade right in this level. Oh, look, it's going up. Maybe we want to consider getting out right in here. Let's switch to the 5. It smooths it out a little bit more. Guess what we have right here? We're in somewhere right around in here. I don't remember. Yeah, it was 950. We got in at 950. We breached now. Look at these candles on the 5 minute. All of our candles are staying above. The bodies of the candle are staying above the 9. So, well, we're still kind of trending up. I mean, we made a nice little bull flag on this 5 minute, and then it shot right back up. But again, I execute on the 1. I'm using the 3 and the 5 minute for trend confirmation. Get back over. I don't think I made that play because I wasn't at my computer. I think I had a client meeting or something like this. I know I jumped in on this trade somewhere right around in here, which I think I got in on this candle right here. I call this candle a double cross candle. Double cross candle, it is a super, super, super high probability play. Look what has happened. We open below the 9 and we close above the 20 to the upside. Okay. Now we're still in a confirmed uptrend for the day. So that's a high probability trade. Once this happened, once that candle closes right here on a double cross, it's a good spot to get in. I got in on this, made a little bit of money, jumped out somewhere right around it. Here's a decent play. Now, I'm going to show you a pattern that is a killer pattern, and I'm not going to spend a whole lot of time because I've been on here for about 45 minutes already, and I know that we've got other stuff to take care of tonight. This pattern is called a rounding pattern. We are not making higher highs. We're actually making lower highs, but we're still in that confirmed uptrend. Nothing. We get a 920 cross. Boom, look at that. But we're still kind of bouncing around, but we are rounding from the top and going to take it back down to the downside. Look at this. Green, red, green. Okay, so I know for a fact I got in on this candle right here, and I wrote it down, and it was a wonderful play. But we did. So here's my reasoning for getting in on this candle right here. I'm all about candles, looking at candles together and looking at them separately. This red candle right here engulfed everything to the left from where we were at the top. So we had rounded, we engulfed everything, and then we wrote it down. I wrote it way down. It was a very nice play. I grabbed one more play during the day. It was on this play right here, and then I was done for the day. I made good money. But anyway, that's a 920 crossover strategy. We're just waiting for the 9 to cross over the 20. Follow your trend, wait for the crossover. If it's double cross, play the double cross. Whether it is a conservative, an aggressive, or a more aggressive strategy, perfect your strategy, get past the second stage of learning onto the third stage of learning, and then eventually get to that fourth stage. You guys can do this. I mean, every single one of you in here, if you have a burning passion to do this, and if you are willing to not quit and to not stop 3 feet from gold, everybody can do this strategy. So at this point, I'm going to stop sharing my screen, and I'm going to open it up for the next few minutes for questions. So what does anybody have? Oh, anybody, if you're interested in my strategy, if you're interested in my strategy, just send me a DM and I'm happy to send it to you.
Would it be okay if I post that in the chat?
Absolutely, please do. Yeah.
Okay.
Yeah, Tech Trader, I see that comment. Yes, they are very high probability plays. The double cross is my highest probability trade. But the rounding pattern, when you see a rounding pattern, either on the top or on the bottom, because it'll do it both ways. You see that rounding pattern go in. I mean, probability wise, they are huge plays. Because there's just lack of conviction to take it back up if you're looking for the round back of the downside. And there's lack of conviction on the bottom side if it's looking to go back up. So somebody's going to win is typically when you're rounding, it's going to go the opposite way. Trader Chick, can you share how during consolidation, when we aren't taking trades because it's crossing in consolidation, but then decides to break for a breakout? Yes. Just like I was talking about on that red candle right there. It engulfed the previous, all the green candles were engulfed at that point. We'd already made a crossover, but it engulfed. Yes, don't chase trades. Don't chase trades. We are not dogs. We don't chase trades. So if you miss an entry on a trade, don't chase it. Wait for another setup. You can miss a big monster trade. But that's okay. We miss most of the trades anyway. We just do. If you try to catch every move, you're going to be very frustrated. So that's it. Wait for those engulfing candles either to the downside or the upside. Back test and learning more in the near future. You're very welcome. Oh, no. YOLO. I want that MACD for calls. I want the MACD to be green on the conservative strategy before we get into a play. But green, no more than 2 or 3 minutes green. If it's 4, 5, or 6 on the conservative strategy, a lot of that play may be taken up. Be very careful. Was that the one FM about limit orders? I think it was about limit orders, wasn't it? I think it was. Yes. Yes, I remember that question. Yeah, I limit in, I limit out. I'm going to let OT handle that because I know how to do it, but I'm sure, OT or Ski, but they're better at explaining it. I know how to explain certain things, but I don't want to fumble that around. So I'm going to let one of the other boys take care of that, if that's cool with you. OT, yep, there it is. For those, I also have, yeah, thank you for sharing that, OT. That's awesome. I also have the data to back up the trading strategy. So if you're into number crunching, I do have the data to back that up. But yeah, there it is right there. Thank you, thank you, thank you. JG. Have a great evening, brother. Enjoy your turkey club. Does anybody have any more questions that I can answer in voice? Because this is the time to do it. I am happy to answer those questions.
Yeah, actually, it's because my computer's messing me up my Discord's messing me up. You're answering the question, but then I couldn't hear you anymore. I don't know if you heard me when I said I couldn't hear you. The question is when it's buying puts, it doesn't need to be. Does it have
Does
to
it
be?
need to be red? Does the MACD need to be red?
Yeah.
If you're using the conservative strategy, it's not a bad idea to see a red MACD for puts and a green MACD for calls. That's a conservative way to do it.
And is it 2 to 3 minutes for calls before you buy?
No, you want it to be green for 2 or 3 minutes. If it's conservative, you don't want to enter a trade. If it's a conservative strategy, you don't want to enter calls on a red MACD. You just don't.
Okay.
Okay. Because again, that's the conservative strategy. I don't really play the conservative strategy. I will jump in on the conservative strategy if I've missed something. I'll wait for conservative confirmation, but I mostly play much more aggressively. Starbucks baby, yes. One more time, can you explain the double cross? Yes. In order to have a double cross, number one, we want to respect the trend because the trend is 100% our trend. Now, let's talk about calls. For the double cross to happen, the 9 has to be below the 20, but it has to be close to the 20, relatively close. If they're 60 cents apart, stay away from that trade. If you got a candle that takes up both of those, 60 cents is really, really pushing it. But if they're close together, the 9 must be under the 20. Once you have a candle that opens, a green candle for calls, a green candle that opens below the 9, but closes above both the 9 and the 20, take a position that is a super, super, super high probability play with a massive profit potential. Okay. Probability. Yes. Probability. Now, for puts, it is the opposite. So the 9 has to be above the 20. And trending or rounding. Once we have that first candle that opens above the 9 and closes below the 20, we want to take a position. Because again, that is a super high probability play. Larissa, can you please show your clear entry on call and put? Is it the first candle or the second? It depends on the strategy, Larissa. If we have a crossover, let's talk about to the downside. So let's say the 9 crosses over the 20, back to the downside. The first red candle after that closes below, that's where you get into a put. Now, on the other way, on calls, the first candle that closes above the 9, once the 9 has already crossed the 20, that's where you want to get into calls. Now, again, that is the conservative strategy. Do you take the top and bottom wicks? No, do not pay. Well, if you've got a super, super wicky candle, don't play giant wicks. But I do not take that into account. It has to be an open below the 9 and close above the 20. So That's the body. The body must open below and close above. So it has to be a body in order for me to take that play on a double cross. Wicks are important, but wicks are less important. Long wicks like that show that there are either buyers or sellers in that area. So I just kind of that's a no-go zone for me. Okay. Can you also let what yeah. So the blue was the 9, the yellow was the 20. You know what? I'm just going to share my screen again. Stand by here. Screen 1, go back to live. Can you see it? Somebody please jump in if they can see my chart. Can you see it? Can you see it?
I can see it.
Okay, good. Yeah, so my 9 is blue, my 20 is yellow. So yeah, that's it. 9 is blue, 20 is yellow. The 200 is red, and the VWAP. So the VWAP is the volume weighted average price. Okay, that is the average price that all of the shares have been traded at during the day. Again, average takes the highs, takes the lows. So volume weighted average price. That can be used as both either support or resistance, depending on the play. Okay. Yes, can you, yeah. Anybody else have any voice questions for me? Or you can type them out. I'm happy to respond to those as well. Yes. Okay. So in the more aggressive strategy, Trade Monkey, pay attention to where the 9 is, where the 20 is. Absolutely. Yeah, because a lot of times, if you're playing aggressively, you can have. So let's talk about puts. We get a red candle close below the 9, but still above the 20. You take a position. A lot of times, what will happen, particularly if there's quite a bit of room between the 9 and the 20, that 20 will act as support. So it'll bounce off of that. And it's the same way with calls. If we have a green candle close above the 9, but it's still below the 20, that 20 will act as resistance on the way back up. So it can bounce off that level right there. Don't believe me? Give it a try. So I hope did that answer your question, Trade Monkey? Okay, perfect. Thank you. Okay. Anybody else have any more questions? When you say calls at the double cross, do you care about the actual 920 cross? I want the 9 to be below the 20 in order to consider it, for me, a double cross. So the 9 has to be below the 20. And at that point, you're in the play. Now, once that 9 crosses back over the 20, buckle up because you're in for a ride. You're going to make some money on that one. So I hope that answered your question, Gur. Okay, perfect. Which order strategies limit, stop, mark? I use limits on everything unless that trade, unless you have a big gigantic. Let's say you're in a play and you have a gigantic candle that goes against you, blows through where you normally would stop. And I don't set mechanical stops. Okay. I use a specific candle or an area for my stops. So let's say you're in puts, you're riding it along. It's not validated out of the play yet, but you have this gigantic green Shrek candle that goes against you, and you're like, oh, I'm getting fucking wrecked on this candle. I will use a market order to get out of that. Okay. That is the literal, that's the eject button. That is the oh shit button. That is screw the cheese, just get me out of the trap. That's what the market order is. So that I'm drawing a picture on the screw the cheese, get me out of the trap. Okay. Anyone else? Either voice, you can unmute yourself, or you can type it into the voice. Does the slope of the SMA when they cross matter? Yeah, absolutely. And that should be, I hate to say common sense, but it should absolutely be common sense. Never heard such language, drinker, but now you have. Yeah, make sure that the slope is going in your favor before you enter a play. But there is something. It's called divergence, where you have 920 divergence or you have slope divergence. So divergence is essentially where price action is going the way that you see it, but the indicators are going the other way. It's called divergence. Stay the fuck out of the trade when you're diverging like that. Okay, you don't want to do that. For me, when I try to limit in, it rarely fills. When the price is moving up, how much further higher than the current price do you add to a limit order before it comes chasing? I like to let a play come back to me because typically the play will come back to you. But if you miss your fill, give it another candle. You can still try another limit order to get in on that next candle, or wait for your next setup. Absolutely wait for your next setup. Yeah, you can mark it into an order. You can absolutely mark it into an order. The only issue with that is you're going to get a shitty fill. You're going to get a bad price on it, but you can mark it in. A few examples. I'm past my allotted time, YOLO. Conservative, aggressive, and more aggressive entry and exit if possible. I am past my allotted time right now. So that is one thing that I know you're praying. I get it. But study the charts, man. There's absolutely there's no substitute for that. Yes, Danny, it works. It absolutely works. The center 3. Yep. By the ask. I probably have time for 1 or 2 more questions, either in voice or on the chat link. So anybody have anything more? And YOLO, I'm not trying to put you off. Trust me, I'm not. It's just I don't have a whole lot of time
Hey,
here.
Diddy. So I'm
Yes.
not saying your name right. It's quick question. Is it Pdaddy? I'm
P-Daddy.
sorry.
It's not Diddy. You just
Daddy.
called me. It's P-Daddy. Yes. There's only one P.
I'm
Diddy, and
sorry
I am
about
not
that.
him. You're good.
I have a quick question. It's about
Yep.
the double crash one more time.
Yep.
So the double cross is not the moving averages crossing. It's actually the moving averages crossing and the candle closing at the same time. Is that
It
what the
is
double?
the candle opening and the candle closing. That's the double cross. It is for me, it has been a super high probability play. So the reason it's such a high probability or big money, a big money maker, is because you're getting in before the cross. You're getting in at the beginning of the play. So it makes it super high probability and a big time money maker.
Okay.
But it's before the cross. It may be 2, 3, 4 minutes before the cross. Because these indicators, they're all lagging indicators. The only thing that's true on the chart is candlesticks. All indicators are lagging indicators. But again, just my strategy. Hope that answered your question.
It did. Thank you so much.
Okay, you're very welcome. Anybody else? Snoop Diggity.
Hey, Pdaddy.
Anyone? Yo.
Yeah, I just put a picture of a possible setup there. Like if you could answer, like say something about it right here.
Well, let me see. Where's the picture?
It's in
Oh, there it is.
Yeah.
Hold on here. Now, what's your question on that?
Like I'm looking at it, how the 9 and the 20 come close really tight, but they didn't really cross. And
Yeah.
you see, and you have that candle right there on the big red candle that crossed both of them. And
Yeah,
next
I'm looking at it right now.
Yeah. Would you like? I mean, would you consider a double cross to the downside right there?
No, not a double cross, because look where the 9 is. Your 9 is below the 20. Now, that's a high probability play right now. Actually, I'd probably wait not for the big candle. So we've got green, where we start in the circle, we've got green, red, green, red. Okay. I probably wouldn't play that. Look at that next candle, small green. But look at the candle after that. Say the candle after that engulfed everything to the left. So we closed below all of that green. And when we close below all of that green, that tells me that it's a much, much higher probability play. You could have gotten in on the candle 2 minutes before that, but I'd wait for a couple more minutes until that red candle engulfs everything to the left, and then play that back to the downside. Yeah, but that's not for me, that's not a double cross because the 9 was below the 20 already. Does that make sense?
Yes, sir. Thank you.
Okay, perfect.
Are
Okay.
you using Thinkorswim charts or are you using the TradeView charts?
Dude, I don't use either one of those. I use Weeble. I love the Weeble GUI, and I like to say GUI. It is a graphical user interface. I love the Weeble GUI. Now, I have trading accounts at Weeble and POS and E-Trade, but I love the GUI on the GUI on the Weeble. I just like the way that the chart sets up. You can do more things with the Thinkorswim, but I love the Weeble. Just my preference.
Gotcha. Is someone going to fix the links on the Thinkorswim stuff?
I would imagine. I'm not the link master, so I don't know.
In the script area. Well, when you go into the Thinkorswim part, all those codes, the custom codes.
Oh, the custom codes?
Yeah, none of those are working anymore.
Yeah, I don't know. We'll take that up. Again, that's not my bailiwick. GIF. Well, you can call it a GIF knob, but I call it a GIF.
Yeah.
What is a GUI? A GUI.
Old timer put them up.
What is a GUI? A GUI is GUI. It is a graphical user interface. Yeah, that's what you're looking at. It's an interface, graphical user interface, a GUI. Sounds like a bunch of bull jizz. Bobby's my boy. Everybody else have anything? Good for you, Thunder Boy.
So you're doing that on your phone or on a PC?
Oh, that's the crazy part. I execute all my trades on my phone, but I'm always watching the chart on my computer. Now, I say always. No, if I'm out, I've just seen a client and I'm in my car, I'll pull over, I'll wait for a setup, and then I'll enter a position. One question, Seabass. Aggressive way on calls. All we need is a candlestick to close above the 9 for calls. That is correct. Wait for it to close or the moment it crosses the 9. No. You want to wait for the candle to close. Always, in my opinion, wait for the candle to close before you enter a position. That's my opinion. Play it however you want, but that's just how I play it. Anyone else? Okay, if there's no one else, I'm going to mute myself. And hey, thanks everybody for the time. And I know that OT and the Skister are going to jump back in here and do the Sunday rundown. So thank you all very much. I appreciate you very much. Trade well, be well, follow your rules, and make money. Later.